your money safe in the index market? It absolutely is, right? It's something called principal protection. So you're never going to lose a single dime of your money while it's in the index market, right? So you say yes to that. Is your money liquid in the index market? It absolutely is. You can pull that money out at any point. Put it in, pull it out. No age restrictions or anything of that kind, right? Check. You get a return on your investment. Is your money growing at all times? It is, right? Anywhere with these products, anywhere from 6 to 9% average rate of return in these products. So not only are you not losing, but your money is also working for you while it's just sitting. Sounds good, right? And then do you get tax advantages? So you get all of these pluses, but when you put that money out, is it tax advantage? It is, right? There's a tax code called tax code 7702.
Okay. I want to ask you a question, bro. I got a question for you. So let's say that we talking to an 18-year-old just graduated, about to go to college, or probably didn't even go to college, probably just got a job, making some money. What would you tell them to tap into this money, and how would you tell them to start to get into life insurance and to go ahead and start now, and the importance of starting early?
Definitely a great question. So first off, my answer will be everybody will get into it for a different reason. There's a lot of even high school graduates now that go into college or don't want to go to college, but they're going not knowing what they want to do. They're going to end up wasting, some of them, 4 years just because, money, time, the stuff that they can't get back for something that they're not 100% sure about. And not to mention, again, the student loan that you're coming out of school with, man, I think over 2/3 of college graduates are now working a job that don't require their level of expertise, that degree, that education that they have, right? So they're overqualified for the position that they have. So this is the reality of the economy in today's market here in America, right? And so for those people who may be graduating high school, who are looking for something to do to make additional income, or someone who's graduating college who's maybe having a hard time finding a job, looking for additional sources of income, whatever the case may be, man, this industry is very lucrative, right? It's a very low barrier of entry, right? I know I got my test in about 4 days. I passed my test in about 4 days. Got my license in the state of Tennessee. 4 days, I'm licensed in 3 other states. And man, even my grandmother, she's over 70 years old, and she actually got her license in about 7 days. It's almost like they're trying to hand you a license to make that additional income. And not to mention, if you look up right now what industry is most likely to make you a millionaire, it's the financial services industry. Life insurance falls under the financial services. Man, there's a quote from actually one of our most successful people in our company here at PHP, Thomas Kahinde. And his quote is, whenever there's a transfer of wealth, whoever's in the middle facilitating that transfer always becomes wealthy. Right? There's always someone in the middle facilitating some type of transfer. Think about Uber. Think about Visa. They don't have any physical, tangible products, Amazon, right? But they're just the middleman. So anytime there's a middleman in the exchange of wealth, whoever's facilitating that is going to make additional income, going to make that a lot of money, right? Man, I can go on and on, but those are just a few reasons why someone should consider the financial services industry and the life insurance industry. And not to mention, man, we're making a really big impact on people's lives, right? With the living benefits of these life insurance policies, how they can access sometimes 100 or 80% of their death benefit accelerated while they're alive. Again, statistics, 2/3 of Americans don't have $800 in their savings accounts in case of an emergency. With these life insurance policies, these living benefits, man, if you have a $500,000 policy, 80% of that is $400,000 that you gave that family access to take care of their everyday expenses and make sure while they're out of commission, if they have a chronic illness, a terminal illness, critical illness, right? These things, these finances are taken care of so they can just focus on getting better and healing, right? Absolutely.
All right, you gonna get them game in this next clip, man. This is just another episode. Hope y'all enjoy this, man. Just a whole lot of game getting out there, man. Make sure y'all really just tap in, and if they want to connect with you, or they find you at.
Yeah, absolutely. My name is Myles Wesley, Myles Wesley. You can find me on Instagram, Myles underscore W3 SLEY, MYLES underscore W3 SLEY. I'm very active on Instagram. You can reach out to my email is Myles W. No, I'll take it back. My email is Myles West, Myles WESPHP @gmail.com. You can find me directly through there as well. So looking forward to connecting with you. We do free policy analysis, real estate planning, financial lifestyle strategies, finding out your budget, helping you budget to make sure you can afford these type of things. If you can cut out expenses and help you with that, we do all different types of things to make sure that you're educated you're financially literate in everything it is that you're doing when it comes to your money. Appreciate you, man.
What's 3 myths about life insurance, and how can you disapprove those myths?
For sure. So, one myth about life insurance is that it's too expensive, right? A lot of people believe it's too expensive. One may believe that because you may be a person or know a person with a lot of health history, right? So the times where insurance becomes expensive is prior to a major health event, or you're just an older individual, right? When you start getting in your 50s, 60s, 70s, that's when your insurance starts to become a lot more expensive because there's something called a risk classification or a risk class, right? And so the older you are, realistically, the closer you are to dying. And so the way insurance works is why it's important to get insurance young is because you are very, very insurable because, the insurance company is looking at you like a young buck. Oh, you got plenty of years to live. You're not a higher risk, right? More than likely, you're still going to be alive for the next 30, 40 years. So they don't mind giving you some insurance for really cheap. So that's why it's super important to get the insurance at a lower premium. Why it's important to get the insurance while you're young. That's part of our crusade is advocating for young Gen Zs, even younger millennials, right? Not excluding anybody, but the younger generation locking these lower premiums. So God forbid something does happen untimely, they have this insurance already in place so that now after the event, they don't have to go, reapply or get denied because they weren't being proactive beforehand before that event happened, right? Another misconception about life insurance is that it's too complicated, right? I'm gonna be honest with you. It sounds intimidating approaching it, right? You kind of put acquiring life insurance on the same level as purchasing a car or purchasing a home, where it's a long process where 3 to 6 months. No, it's actually super, super easy, super elementary, very straightforward. We can sit down with an individual. Everybody's different, but sometimes it could be a quick 30-minute consultation, or sometimes it may take a day, right, or a couple hours, whatever the case may be. Everybody's different, but bottom line is it's really not as complicated as people make it out to be. The only time that it starts to get complicated is, again, when we're facing these health issues and these chronic or prior things that happen in regards to the health and the risk classification. That's when we start having to just shop around and make sure we're finding the best product for that individual. But otherwise, again, life insurance, just the acquisition of it, and the principle of how it works in and of itself, I believe not to be as complicated as people make it out to be. The connotation is not what it actually is in reality. And thirdly, the third misconception about life insurance that I would say is that, there's a lot, but let's say people say that it's a scam, right? And there's a lot of reasons why people will say that life insurance is a scam, understandably, right? Not in reality, but understandably, right? Just speaking off the contextual history of especially our community in regards to how we've been treated in regards to these life insurance companies and the government and things like that. We have been on the short end of the stick when it comes to how we've been treated with these insurance companies in the past, before there were a lot of regulations and laws, things passed in regards to that, right? But now there is the new life insurance, right? There's a new life insurance. There's a lot of regulations, stipulations, to make sure that the individual, the consumer, me and you, people like me and you, and our viewers, aren't getting that short in the stick, and we're getting what it is that we're asking for, we're paying for, right? So in regards to the insurance and things of that nature, these things is guaranteed to be paid out, and guaranteed that you make sure you're having your money. Because one example of how we got the short end of the stick in the past is because we would be paying literally tens of thousands of dollars to acquire this insurance for our family over the decades or whatever, and then when we pass away, right, our great grandparents, when they passed away, and then it was time for whoever, the children, to get their money, that death benefit, they weren't getting it. They only getting $5,000 or $6,000. Well, we put $10,000, $20,000 into the policy to make sure we have the insurance over the last couple of years, as decades. And you telling me I put this much money in, I'm only getting half of what I put in? All right. So again, these are things that happened before the regulations and the laws were put into place, right? So again, understandably, right, we can go down a rabbit hole and a litany of things in the past that prior to regulation and attention from the laws and these institutions were in some ways corrupt and not utilized for the benefit of the consumer. But again, in today's times, now I can confidently say, because I myself personally put into it, my family, I advocate for my family too, and I'm seeing, right, when you're studying the habits of the rich and the wealthy, you see what they're doing with their money, right? Just a quick example of Rockefellers, right? Just do your own research on that. And so just doing that type of research, I'm understanding the product and services that they're utilizing, which is the life insurance, right? And so it gets to a point where it's like, hey, I see what's going on in the real world. I see how people are utilizing this. I see how people are becoming wealthy using this life insurance, using the index market. So how can I, as an individual, you don't need to be a millionaire, a billionaire to take advantage of these products and services. That's what we're telling people about. Amen. So those are just three of the many common misconceptions of life insurance. Hopefully, myself and Devil were able to clear that up for you today. Drop in the comments if you have any other misconceptions or things that you believe to be true or false about the life insurance industry. We would love to hear your opinions on those as well.
Hey man, y'all already know how I get, bro. Just let me know down in the comments you got any questions. We're gonna answer those, man. Gonna send those questions to Myles too. Like,
there's 4 homes of money, right? So no matter where you put your money, where you save your money, where you invest your money, there's only going to be 4 places that you can put it, no matter what, right? So if I gave you $10,000 right now, what are one of the 4 places that you may put that money, or save it or invest it? Where would you put your money if I gave you $10,000 right now? You said your savings account? So like the bank account? Okay, bank. That's awesome. So how do I do this shit?
Yes, sir.
Okay. Got the So what's another place that you would invest your money? Let's put your money. Stock market? Okay. Right, and so your stock market, it has like children, if you will. Every home has its child, right? So your stock market, its children are going to be like your 401k, your 403bs, your Roths, all of these different children that fall in the stock market. That's going to fall in the stock market, right? Your bank also has children, right? Your CDs, your checking accounts, your savings accounts, your mutual funds, right? So all of that falls under your bank. So what's another place that you would invest your money? So what's another place that you would invest your money? What's another place? Real estate. Okay. And then we're gonna put question mark for the fourth, right? So what are some of the characteristics that you want with your money, right? So like, for example, why'd you put your money in the bank?
So make sure you're safe.
Safe. So you like safety, all right? All right. What's another characteristic? You want your money to grow? So you want like a return on your investment. You want a return on, okay? You want an interest rate, okay? So you want a return on your investment? Say again. I don't know. So yeah, you got a return on your investment, right? So what's another place that you want to invest your money? Or what's another characteristic that you want with your money?
Make sure I don't. What we already said.
You said safety. Okay, so what about like when you put that money out? What happens most time you put that money out? You get taxes. Exactly. So you want somewhere to where favorably put it out tax free? Is that a thing? Is that something that you would want?
Yeah.
Okay. So you want. All right, tax advantage, and then you want to be able to access that money at any point, right?
Yeah, for sure.
So like liquidity is pretty important to you.
Yeah.
Okay. All right. So we got safety, liquidity, return on your investment, and then you got tax advantages. So let's go down the line and see which one gives us the most checks. Okay. So with your bank, is your bank safe?
Yeah.
Right. We talked about that. Up to $250,000 FDIC insured, so we know we're good to go there. Is your money liquid in the bank? Yeah, you can put the money out when you're ready. You get a return on investment. Is your money growing in the bank from it just sitting there?
A little bit.
A little bit, but not really. It's like 0.01%, 1%. So it's not really double. So we're gonna call it a no. You get tax advantages when you put that money out of the bank.
I think so.
Nah, you don't. All right. So that leaves us with 2 out of 4 checks. All right. So your real estate. Is real estate safe? No. You remember what happened in 2008? 2020, the housing market, and even now, the cost of living is so expensive, right? So real estate not really safe. Is real estate liquid? If you bought a house today, could you pull the equity out tomorrow? No. All right. Return on your investment. Do you always get a return on your investment in real estate? It's not guaranteed, right? So we're gonna call it a no. If it ain't a yes, it's a no. And you get tax advantages with real estate. You actually do, right? So something called like 1099 exchange or ELOC, pulling out equity on your home. So yes, you do get tax advantage, right? So that comes out to only 1 out of 4, right? In your stock market, think about that 401k or S&P 500, whatever you want to think about. Is your money safe in the stock market? Not at all. Not at all. Think about the tariffs going on right now and the credit score that's happening. All right, so definitely not safe. Is your money liquid in your 401k? Can you pull that money out at any point? Taxes and penalties. You can't pull the money out until you're 59.5, right? Return on your investment. Do you always get a return on your investment in the stock market? Are people getting a return on their investment in the stock market right now? Not really, man. One day, it'll be red 3 days in a row, green one day, and back red for the next 4, right? So let's say no for that. And then tax advantages. You get tax advantages in the stock market. Nah, not really. All right. And so we're gonna call that 0 out of 4. So what is this fourth home of money, right? This fourth home of money is called the index/insurance market, right? So let's talk about the index or the insurance market. Is your money safe in the index market? It absolutely is, right? It's something called principal protection. So you're never going to lose a single dime of your money while it's in the index market, right? So you're going to say yes to that. Is your money liquid in the index market? It absolutely is. You can pull that money out at any point. Put it in, pull it out. No age restrictions or anything of that kind, right? Check. You get a return on your investment. Is your money growing at all times? It is, right? Anywhere with these products, anywhere from 6 to 9%. average rate of return in these products. So not only are you not losing, but your money is also working for you while it's just sitting. Sounds good, right? And then do you get tax advantages? So you get all of these pluses, but when you put that money out, is it tax advantage? It is, right? There's a tax code called tax code 7702. And what that says is when the IRS views this insurance product, is looked at it as it is, which is an insurance product, not an investment. That's why they don't tax it, right? And so what does that come out to be? 4 out of 4. So looking at this, where would you want the majority of your money, right? Nothing wrong with the stock market. We know we can make some good investments, some calculated investments. Real estate, get your assets, absolutely live the American dream. Bank, we know we need the bank account, liquid, put that money out, right? But when it comes to the majority of your money, the money that you can't afford to lose, where do you want your money?
Index.
Why?
Safe than the world.
Is that your favorite characteristic? Is the safety? The safety, absolutely. A lot of people are like yourself that want safety and control in the index market with their money. That's why they gravitate to the index market. That makes sense? You have any questions? Awesome. So, the top 2%, how do the top 2% of Americans invest and save their money? Where do they put their money first, right? So, if we're looking back at our previous graph, we saw which one of those homes had the most check marks of the 4, the index, right? So that's their financial foundation. They put the thing with the most check marks with their money at their financial foundation. So they actually start with right. So they start with the life insurance as their foundation, right? And then which one had the most checks after? It was the bank, right? Right, and so with a bank, we advocate for people to have. It's smart to have anywhere from 3 to 6 months worth of expenses liquid in case of an emergency. You know that the average American doesn't have $800 in their savings in case of an emergency, right? So the top 2% know that they need to have that 3 to 6 months worth of money in the bank in case something happens. They get fired, they can't work, they're sick, they got to call off, whatever the case may be, they have it, so they're not worried about it, right? And then following the bank, which one had the most check marks after that?
Real estate.
Your real estate, exactly right. So now that you have your bank, now that you can go and buy a home comfortably, right? And then finally, which one had the least amount of check marks? Is the stock market, right? So with the stock market, you don't want to put any money into the stock market that you can't afford to lose. As calculated and as smart as you may be, the stock market is a risk. Investments are risks, right? And so you want to make sure that you're not putting any money in the stock market that you can't afford to lose. All right, so this is the 2%, right? So let's start with the index. So this is how the top 2%. How do the rest of us, the 98%, the people that look like me and you, how will normally they taught to invest their money or put their money, right? Come on over here. Move it over. My bad. Back it up some. Oh, this is my head kind of. Maybe. Oh. Yeah. Alright, session 12. That's a lot better. Yes. So here is how the 98% invest their money. So think about it. When we graduate college, go and get a job, and what's the first thing that they do when we get a job? Go through orientation, they go to HR, and they enroll us into a what? To your 401k, or your employee benefit package. That includes your 401k. That's a child of what home? The stock market, right? So here's how most Americans are starting off. Their financial foundation is in the stock market. Risky. What do I have to say? Money that you can't afford to lose shouldn't be your financial foundation, right? And then what's the next thing they do? They got this nice job. They're making all this adult money now that they're graduated. But they want to go. They want to go buy a house, right? So now they want to go live the American dream. They go into real estate, right? And then after real estate, now they got this nice house. You got a nice house. You got to go get a nice car. You got to go, furnish the house, get your furniture. So guess what? Now they're tapping into that bank. That's the 3 to 6 months of expenses are wiped out, right? Go to the bank. And so now, what's the last thing that anybody thinks about? But the first thing anybody needs? It's their life insurance, man. So this is how the majority of us, we're working backwards. We're hustling backwards. This is what the top 98% are doing, right? And so again, then this is where you ask them, you don't have to tell me, but where are you? Make them be retrospective. Where are you? Are you part of the 2%? Is your money looking more like the 2%? Or is your money looking more like the 98%? Are you happy with where you are? Are you satisfied? Are you on track to be where you want to be? Where are you now? Are you on track to be there? Right? Ask those type of questions, make them, put them in that spot saying, damn, now I don't have an excuse not to do anything because he just laid it out so perfectly. Let me get with him. Right? And so then like, bro, you can just start throwing out random facts like, okay, we're talking about how the top 2% of America invest their money. I think personally, I haven't really heard anybody else's example, but me personally, if I heard someone tell me that the SEC, the Securities and Exchange Commerce, the president of the SEC has 54 life insurance policies. His net worth is well over 300 million. So you don't got to listen to the billionaires. You got to listen to anybody else, the millionaires. But if you're going to listen to anybody, let's listen to the person that's over the Securities and Exchange Commission, that's over the federal, that talks with the Federal Reserve, that talks with the IRS, that talks with everything that's going on. I want to see what he's doing with his money because he knows a little something about some money, right? 54 life insurance policies. Just to think, how many people on average, what is the 98, how many life insurance policies does the average American have? Maybe. All right. So why do you think it was important for him to get 54 life insurance policies? Do you think, do you think it's a little bit more than just a death policy, right? Because what do you think about when you think about life insurance? Most people think about death. But if this guy got 54 life insurance policies, and there's got to be a different reason for why he's using the life insurance policies. And it is. It's for the living benefits. It's a life insurance policy, not a death insurance policy. I said life insurance. We sell life insurance, right? And so just throw them examples out there and make them think about it. Don't just give it all to them. Ask them, why do you think he has 54 life insurance policies? They're not gonna want to know why. Make them think about it.